Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, August 23rd, 2012. Well, a continuation of the trend to the downside today in a very large black body candle. Previous day's trading we had a small doji type candle, almost a doji, with a very large shadow on the bottom where the market found solid support around the previous resistance area highlighted by the dashed line here. That did set the market up for a potential change of trend back to the upside. We had a candle there where the buyers actually took control and the sellers lost commitment. But for today's trading, the buyers weren't strong enough to trade anywhere near the high, and the high coincided with the 14.15 level of resistance. And today the markets continued this sell-off to the downside, trading through that area of support with a very large black body candle. The large black body denotes the sellers making a very solid amount of net bearish progress, and it does set the market up for a potential test to lower levels. The sellers have closed with strong control of this market by closing down towards the low, but if you look at the small shadow here, there was some price rejection from the 1400 area, and we know that round numbers are very important areas of support and resistance, and in this case moving forward it is crucial to this market trading any lower. The resistance offered around this level extends down to around these lows, roughly about 1395, 1396, and then we can expect to find some potential support down around the 1390 level at this previous swing high if the market does trade down through that level, but certainly a very solid bearish day with the sellers firmly in control. In terms of the Fibonacci extension, and we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and for the previous day's trading we saw a rejection from the 23.6% area, a minor level, and today we're seeing the market trade through the 38.2% level in a very bearish manner, but test exactly to the 50% level and some price rejection. Now that doesn't necessarily set this market up for a change of trend, because we don't have any sign that the trend will change. The sellers are firmly in control and the buyers certainly don't have any strength, but combined with the resistance around that area and this 50% level, there is potential for the market to capitulate around this 1400 level. If we do see the market trade down, then the 61.8% level is at 1395, coinciding with that zone just below the 1400 level, but then also we have the 100% level down around the 1381 area. In terms of the Fibonacci retracement, here we've seen the market trade through the 23.6% level in a bearish manner, and it does seem as though the market may test down to the 38.2% level at 1394, which coincides with that area that I highlighted just below that 1400 level. Now, some of you may be querying why I'm not using the 1426 high as the high for the upswing. The reason is because the trend actually changed to the downside at this level here. At this candle we had a downtrend in place, and there wasn't technically any change of trend here at this point where we had an outside day, so it doesn't make it possible to use that area because the trend was actually still down all through these prior four candles. Now, in terms of Ichimoku, a bullish market in the long-term time frame by trading above the cloud, remaining bullish in the medium-term time frame by trading above the Kijun-sen, but still looking a fair way away from the Kijun-sen, and that is pointing flat. And it wouldn't surprise if this market continues this downtrend to test back towards the flat Kijun-sen. We know that when the Kijun-sen turns flat, price action tends to be attracted back towards there. The market is now bearish, however, in the short-term time frame by trading below the Tenkan-sen, the green line here, and it has been some time since we saw the Tenkan-sen or the market trading below the Tenkan-sen. And interestingly, for the previous day's trading we saw the area below the Tenkan-sen hold a support, and today not. So quite a change of character for this market, and it does suggest that the market may probe through the 1400 area and test down to around the 1395, 1394 level. But certainly that area is important to us moving forward. Below there, as I've mentioned, we have this swing low around the 1391, swing high around the 1391 area, and then no major support until we trade down to roughly the 1380, 1378 area, where we have very strong support. If we do see a change of trend back to the upside, then strong resistance at 14.15, 14.22, and then up to the 14.26 area, but quite some bearishness. 1400 is very important, and extending down to 13.95.